Alright, well, g'day there everybody. Thanks a lot for joining me on this Monday afternoon market recap. It is going to be relatively quick. There isn't a whole lot to really update you on what has really sort of transpired over the past, well, during today's session at least, and certainly from essentially the back end through to the beginning of this week. What we have seen, however, is a little bit of a stabilization today. This is a little bit of a surprise. Last week we closed exceptionally bearish with that outside day engulfing Morobozu candlestick. And again over the weekend we were speaking about the potential of these markets ultimately coming back down and closing some of these open windows right across the board on the US financial markets. This is the chart of the Nasdaq. You can see down here, technically it's going to fall in very close to the psychological number of around 8,000. It makes a lot of sense that if we were to see a follow through, right, based on that of Friday's close last week, makes a lot of sense that this would be a general vicinity, right, where this green rectangular box is on my screen, where essentially X marks the spot. If we go to the weekly chart, what you're going to realize too is that we are coming back on down potentially on a larger fractal to retest what has been roughly 18-month resistance as new support. So although we have technically done this very quickly, right, on the daily time frame whereby we got above it, we pulled on back down, then we got this outside day bullish engulfing candle, then we saw the markets go off to the races a little bit, right? It makes sense that on the weekly time frame that we are going through a larger fractal whereby we are going through that of the gap closure, all right, prior again to the continuation to higher prices. When I show you this on the S&P 500, a very similar type of story sets up again. Last week, especially on Wednesday and also on Friday, we started to see those engulfing candlesticks set up. Today, however, we saw a little bit, or at least the handbrake pulled on the market. We closed up 8.42 points. You can see that we are still contending with those rising exponential moving averages. You can see that we are still between the 10 and also the 20 exponential moving average. So there's no guarantee that we are going to come on back down to say 2,950 or a little bit lower on the S&P 500. But again, even though short term it would be technically, right, a little bit bearish, on the longer term, it would really set up and really substantiate, really legitimize, right, the health of this market continuing to higher prices. Number one, we would fill this open window. Number two, again, on the weekly time frame, I might just flip out and show you this. We would essentially close this on the larger fractal, right? We'd successfully retest and hold old resistance as new support, and would really lay sort of the foundation, right, the trampoline for these markets to move on up higher for a longer duration. You can see also that we've got the rising 50-day exponential moving average of the exponentials, right, coming on up again roughly in the general vicinity where on my screen X marks the spot. I've gone through the Nasdaq, I've gone through the S&P 500. I think you get the picture. Now again, there's no guarantees. I'm just going to draw a little cross here. There's no guarantees that something like this happens. Again, we initially floated this idea back in the month of June. As we saw the essential gap and go over here, right, the first trading session in the month of July where we got these gaps above and some of them breaking new all-time highs, okay? We were speculating that the markets themselves would turn around very quickly, close it, and then continue. We haven't actually seen that yet. And again, mixed with some of these candles, and again, some of these oscillators that are flicking back into very short term, right, overbought and pulling back out of that overbought territory, it makes a lot of sense that something like this may well and truly happen. If it doesn't have the insurance policy open, we're already net long in these markets, and we have been for quite some time. But again, if the markets want to continue higher, don't fight it. It just means that we're not going to close the window. And again, you don't want to miss out on these prices if in fact they do move higher. So again, a pretty decent little bullish day today. At least it held up quite well after the bearish sort of action or price action that we saw on Friday. But again, I still believe of the two options that we are going to see a pullback prior to the continuation to higher prices. If you want though, keep those insurance policies open, all right, across the board for the US or in the US financial market indices. It's very important that you do such a thing. Now, again, when it comes to our top 12 individual trade list, and a lot of stocks out there, we're in the midst of earnings season at the moment, okay? And what we were speaking about also over the weekend was that if you did see a little bit of a bullish bounce in some of these stocks, right? Some of these stocks that have largely just moved sideways most recently, or if they have even pulled back, it's a good opportunity for you to liquidate those positions as you move closer towards these vertical lines on my screen, which are indicative of their earnings reports. Today on Apple, we saw a little bit of a bullish bounce, up just over $4.50, 4.63. Bit of a random sort of candlestick after that of what we saw last Friday, but again, we'll accept it. So for me anyway, and as I look at Apple and when I think about you, I'd say that this is a fantastic opportunity. If you haven't already, to actually liquidate out of Apple. We've been in this since 184.61. I don't know if you're going to get a better price, right, or at least more of a material price higher as to where we closed today on Monday. So if I was you, and if I had this open in my account, I would close this out first thing tomorrow, and I would be done with Apple as we move closer into earnings. Again, when it comes to Netflix, we closed up $21 today. That's a pretty decent little, chunk of change in the back pocket. Original entry was all the way down here at 1,828. We're getting exceptionally close to earnings. Please just close this if you haven't already done so. Again, I'd be shocked if you haven't. But if you haven't, just close it out now after that nice little bounce. Boeing Airlines, again, you should be out of this, all right? If you're in at 361 or if you're in at 363, look, tomorrow's the last day to liquidate Boeing Airlines prior to that earnings call. You've got Baidu, which is essentially still moving sideways. Caterpillar, there's no trade, and there hasn't been a trade after we liquidated the position up here at 139. Okay, that's done. We're moving sideways at the moment. Again, very close to earnings. That essentially has run its course. COP, not really much of a trade going on. 60.66 or 61.58 since then. Pretty much just been flat. All right, this may be the best price that you get moving into earnings to actually liquidate that trade as well. So again, you wouldn't be looking for any trade opportunity. We were speaking about perspective, okay, and where you should be focusing. It should be more so on the individual markets themselves, the market indices. That is where you should be looking to actually jump on in strategically off from those gap fills that I've already referenced in this Monday afternoon market recap. And as we progress through earnings, I think 9 out of the 12, right, on the left-hand side of my screen of these individual stocks are going to have moved through earnings successfully, as at the close, or at least the end, the finish of this week's worth of trade. And then what we'll have this coming Saturday is another full week, essentially 9 out of 12 stocks, whereby we're going to have a blank canvas of trade opportunities outside of what we're currently focusing on at the moment, which is the US financial indices, right, the markets themselves. Disney's pulling back, interestingly enough. Again, adequate time through to earnings. If there is a spike in this, you'd be looking to close this out. I'm very bullish on Disney, by the way, but again, the coinciding with earnings at the moment, it's not really doing it all that much favors. You've got Google again still holding up $7.72 today, a little bit of a hammer. This is technically a very bullish candlestick. It is technically happening too, very close to a known support area. All right, but again, you have to liquidate this week, or at least certainly before Wednesday. Because of earnings, IBM has reported no trade on this at the moment. Very simply allowing this to move sideways up and around resistance. You've got 2 consecutive shooting star candlesticks up and around this 150 handle. I wouldn't go near it at the moment, not until we build more of a resistance area and also that of a support area, whereby we've already speculated it's going to show up in the way of a stair step, right, a continuation pattern, or even potentially that of a bull flag, which again is still going to lead to higher prices at the moment based on what the market's doing. I really wouldn't be jumping into, right, IBM at this particular time. There is going to be a point in time to do such a thing, but right now, just let it be. Microsoft, this is something that at least reported last week. Earnings has come out. We got the gap up. We traded down today. We were up $1.81. We've got the insurance policy again up here at 141.20, but I would like to see Microsoft essentially come down to 130. If it came down to 130, that would be an absolute bargain, and we'll just keep our eye on that anyway. We'll monitor it. We'll move with it. And we'll see whether or not it gives us a fantastic opportunity to re-enter it. Down here, as I just said, at 130. Netflix, it continues to sell off. I mean, we're talking about that 300 psychological round number. There's also a gap down here at about 297 to close this first gap. There is another one below it. But pardon me. But based on the market structure, based on the market sort of environment, the direction of the market, what you don't want to be doing is trading counter trend. So although technically it's very simple to sort of eye off and eye up and size up that of a short, right, we have strategically said, look, we're not going to do it just based on the simple fact that the market continues to drift higher. And there's an element of risk involved because essentially what's happening is that we've got this open window, and mark my words, there's a very high probability that this window, say for instance we come down to 300, there's a very high probability that we're going to rally, essentially $65 to close that window over the coming months. And that's really what we're sort of looking at the moment, instead of trying to catch a falling knife at this particular point. We're not nowhere near it at the moment. We're going to bring this long entry down over time, and then we'll sort of cherry pick the trade as it exhausts itself to trade on up and to close this window. That's essentially what we're looking to do on Netflix, but as it stands, it's still quite a ways away from actually happening yet, right? Until, of course, the risk comes down and we really open up again that reward that we think is going to be on offer of about $65 on Netflix over the coming weeks. All right, so I hope that helps you as that Monday afternoon. Again, be patient on the market. If you haven't bought it today, so be it. If you have, that's fine too. Over time, though, this market, it's looking to move higher. And really what's happening right now is this. If we do see the pullback, this is going to be that critical back test of old resistance is new support, where X marks the spot with the rising 50 exponential moving average, with the final closure of a lot of open gaps still in the market indices. And it's also going to essentially let us shake out this overbought sort of setting on the oscillators. That doesn't necessarily have to happen. But again, this falls into the dynamic of the market itself moving from a range-bound state into that of a trending market, right? For the second half of 2019. There are a few other principles that I haven't spoken about in this Monday afternoon market recap, but I hope you get the gist of what the market analysis, at least, or at least the technical analysis, is suggesting to us at the moment. And again, just stay hungry, be patient, but at the same time, strategically speaking, all right, the best entry price, at least on the S&P 500, is going to be just below 2,950 if you're looking to sort of snag yourself a little bargain, okay, prior to the continuation of higher prices. Otherwise, insurance policy, insurance policy, insurance policy. Right, on that note, everyone, I'm going to finish this recording. Have a look into that pro analysis class too if you like the analysis. And look, if you have any questions, pardon me, please send me an email, success@pivotpoint-trading.com. All the best, everyone. James signing off on behalf of Pivot Point Trading. Enjoy your evening. Goodbye.